much does life cost you? And how much of that is covered by income versus taking money from investments at the moment? Rabbit, everyone. Happy November. This is Stephanie McCullough, founder of Sofia Financial Planning for Women, coming at you with another dose of financial good luck. When I was little, my friends and I believed that if rabbit were the first words out of your mouth on the first day of the month, you'd have good luck. So I wanted to share an experience I had this morning because I think it might be instructive. And it falls under the heading of, what do you want from a financial professional? I met with a client who has an accountant and has a financial advisor, but didn't feel like she was getting what she wanted from them. And to be fair, she wasn't sure precisely what she wanted and needed, but it didn't feel terribly proactive, her interactions with these professionals, and it didn't feel comprehensive. For example, the accountant was talking about her taxes this year and not really going forward into the future, and how to think about moves you might make now to improve your situation in the future. And the financial advisor was really talking about investments and maybe one-off conversations on other things, but not on an ongoing basis. So I thought it would be helpful to give you an idea about the topics that we at Sofia Financial cover in these types of conversations with clients. All right, this is a one-time session, flat fee, no obligation, no sales going forward. But we talked about, do you have money in the bank? How much money do you have in the bank? What might it be for? And I'm distinguishing money from the bank from investments. Money in the bank's not going to go down in value. So if you need it soon, or if you don't know when you're going to need it, it's going to be there for you. Versus investments go up in value, they go down in value. So the cash in the bank question is, well, do you have, that emergency fund, that, the oh shit fund, the something just hit the fan, whether it's dental work or pet expenses or car repairs, or sometimes it's a happy thing. Sometimes it's the opportunity to go on a great trip that you hadn't necessarily planned on. You have to come up with some cash. So cash in the bank, what would you call upon should you have an emergency need? And where is it? That's part of the conversation. Then this person had some money coming in. Sadly, her mother had passed away and she was inheriting a couple of different types of assets. So the conversation was where to most prudently and wisely put those dollars to work. What types of purposes might they serve in her life? And then from there, what types of financial vehicles would they fit in best? She had an inherited annuity, which if you've ever been the beneficiary on an annuity, you might know that there are different options you have when you inherit it. So we talked about finding out from the insurance company where it is now exactly what the options look like for the beneficiary. If it's lifetime income, how much income? If there's other options, what are the parameters around that? And then comparing those to what might be out there in the marketplace if she were to swap it out for something new. Does she keep it in an annuity? Does she take it in a lump sum? What are the tax implications? What are the financial market risk implications? And what's the cash flow implications, right? Of course, we actually started all of this with how much does life cost you? And how much of that is covered by income versus taking money from investments at the moment. We did talk about taxes and what things might mean to her tax bracket, but also, for example, the surcharge on Medicare. This person happens to be claiming Medicare at the moment, which you're eligible for at age 65. This is all US based, just to say. So if your income is too high, you actually pay extra for Medicare. So how do we think about now and in the future, what taxable income might she have, and try to avoid being in those super high tax brackets by some moves we might be able to make now. For example, converting some of her IRA to a Roth IRA. That costs money because you have to pay tax now, but maybe that's a good thing. It's always a multivariable equation. We always have to weigh all the trade-offs. And then quite honestly, her question was, do I stick with this team I've got now? And, you know, that's something she'll have to answer for herself, but helping figure out the questions to ask is, I think, the biggest piece of it, right? What is it that you want to be getting help with? And quite honestly, we didn't talk about this today, but what are you paying for the support you're getting now? Because a lot of my compatriots in the financial advisor world, our fees are kind of invisible. They're taken out of an investment account. We don't actually know what we're paying. So what are you paying? What are you getting? What do you want to be getting? Is that a good lineup? Before you take someone's advice, like using your cousin's financial advisor or your next door neighbor's brother-in-law, find out, first of all, do some self-reflection. What kind of help am I looking for? And then, is this what that person does? Is that their specialty? Is that their expertise? And if not, that's fine. Keep researching. I wish you the very best of financial good luck, and I'll see you next month.